Well, let's get to the market panel, why don't we? Vital Knowledge founder Adam Crisafulli and Wilmington Trust head of investment strategy and CNBC contributor Meghan Shue. Welcome to both of you. Meghan, so the major indices mostly lower. A lot of people wondering what a second Trump administration is going to bring for equities. You say there are puts and takes. It's unclear, but I wonder particularly what your take is on big tech, because whether it's NVIDIA and the likely China export restrictions that we're going to continue to see, whether it's Apple, Amazon, Google, that have at times been in a President Trump's crosshairs, it looks like it could be iffy, no?
Yeah, I think you are really describing the dynamic that we have been focused on, which is that a Trump 2.0 economy is probably one, our overarching message is one of wider distribution of outcomes. So potentially higher highs, but also potentially lower lows from some of those riskier policies that you've dimensioned so well on the network. As it relates to technology, I think this is a perfect example, excuse me, of a sector that's kind of caught in the crosshairs of those policies. And I think here it matters magnitude of the policies as well as timing. And when you think about regulation, so a lighter regulatory touch, particularly right now when artificial intelligence is at its really ascent and a very critical part of the technology picture going forward, we think that that would be helpful for big tech. But then if you move into the latter half of 2025 or 2026, tariffs probably become a little bit more of a focus. And there, big tech is at risk from retaliation as well as supply chain disruptions. And then overarching all of that is really the interest rate backdrop, which moved higher today. And we don't see moving meaningfully higher from here. I think to see the 10-year yield move much above 4.5% would require a bigger re-rating of growth expectations than we expect. But that would be a headwind to valuations as well. So overall, we are still constructive on big tech and technology, but I wouldn't be moving too much out in terms of an overweight. We think you need to maintain that exposure and keep a long-term time horizon.
Now, as we've been talking, Skyworks results have crossed. The initial move on that is higher. We're not ready with those yet, are we? We are. Pippa Stevens has those numbers. Pippa.
Hey, John. So for Skyworks, earnings coming in at $1.55 adjusted. That was 3 cents ahead of estimates. Revenue at $1.02 billion. That was in line with estimates. Now, non-GAAP gross margin for the period was 46.5%. That was also in line. Q1 2025 revenue guidance was slightly soft. Now, the company did say that AI is poised to ignite a transformative smartphone upgrade cycle, propelling demand. And they said that they're in the early stages of this multi-year trend. You see their shares up about 2.5%. Guys?
All right, Pippa, thank you. Adam Crisafulli, I want to get to you on technology. Don't know if you want to talk about Skyworks, but I'm curious about some of these marketplaces. Shopify had a really strong day, up 20+%, I believe. AppLovin is up just about doubled in the past month. Shopify gave a big, strong holiday forecast. Its Q4 tends to be influenced by payments volume. So we've got Spotify, different from Shopify, coming up this hour in a slightly different space. We're going to talk to Shift4. What do you see potentially happening here in digital marketplaces and payments that investors ought to be paying attention to?
I think for a lot of these companies, they have such powerful growth tailwinds that they're almost agnostic to the regulatory or the political environment, which is why, on days like this where yields spiked and you saw weakness in a lot of the more economically sensitive groups, these names tend to shine. They almost take on a utility or a staples-like characteristic of being almost a safe haven. They have this duality to them of being both growth and safe havens at the same time. So I don't think there's a ton of anxiety politically when it comes to tech. Obviously, they're going to be impacted depending on what happens with the M&A policy. Supply chains could be at risk depending on how tariffs shake out. But I think it's more kind of investors taking a step back and looking at what will the implications be for domestic growth? What are the implications going to be, more importantly, for rates and inflation as these policies are rolled out?